Navigate our discussion now more towards the fundamental side of the story. A bit needs to be covered in terms of FMCG and the IT basket, perhaps. Let's just say the entire defensive space and how it's picking up the momentum in this from this month onwards. And to take the discussion forward, we're being joined by Sandip Bansal, the Associate Director at Ask Investment Managers. Thank you so much for joining us this morning.
Thanks for having me.
Pleasure is all ours. What do you make out of the current market? A bit of rebound which has come through after the Federal Reserve has held on to that rates around that 22-year high perhaps. But second consecutive time that this has happened, the tone seems to be a little, in the favor of the markets, perhaps hinting that the rate hikes now would be done past with. We're nearing the end. What do you make out of it?
Right, that's true, Nikki. So, the cost of capital globally seems to have stabilized now with the second consecutive pause by the Fed. The ECB had also paused its, rate hiking cycle. Global liquidity continues to be abundant. Sentiment, while globally have been marred by the geopolitical tensions, from an India perspective, it continues to remain a favored investment destination. From a fundamental perspective, we continue to expect a mid-teen 15% kind of an earnings growth over the next couple of years. The earnings season so far has been broadly in line. Overall, the setup looks good. Lastly, the valuations piece, broadly speaking, Nifty earnings are likely to be around 1,000 rupees 1 year forward. We are looking at a market valuation of around 19 times. We have been higher than these levels. From a valuation perspective, while we might not be particularly cheap, we've been more expensive. And given the overall setup, it does look that, there are opportunities out there for investors with a long-term horizon to make money.
Speaking of opportunities, let's talk about IT mid-caps. They seem to be outshining the larger players, gaining a bit of FII interest overall. Do you think it's now time to consider something like a Scient or persistent system for your portfolio? Sure, you might not be very stock specific with all of that, but a broader trend as to with the levels that we're witnessing for the IT index in the previous month, do you see the valuations now being attractive?
Sure. So, from a longer term perspective, we are not likely to see IT to be a very high growth sector, the broader space per se, especially the larger cap names. While capital efficiency continues to be very good, given recessionary concerns in the US, growth is likely to be at best in the, high single digits. For the more smaller and mid cap kind of names, yes, in pockets, the growth could be faster. But, we would also need to consider that valuations in that pocket still continues to remain elevated. So, what we would need to evaluate is the growth outlook versus what is currently already priced in. We would tend to be selective in that space.
Sure. Would you want to spell out specific names? Would it be more in the favor of, say, a large cap versus mid caps overall?
So unfortunately, we'll not be able to talk specific. But overall, one could say that growth in the mid cap and the small cap space in the IT sector could be faster than the large caps. But given the underperformance that the large caps have seen recently, could there be a bounce? Potentially the answer is yes.
Okay, let's talk about essentially the oil marketing companies. They've seen a bit of relief rally, let's just say in the week put together on account of the falling crude prices, which seems to be like a temporary phenomenon because we don't know how the escalation of war takes place and what's the bearing of that on oil prices. And with respect to that, also oil marketing companies. What's your assessment on the entire sector? What would you suggest?
So, the refining cycle over the next couple of years continues to look good with, demand potentially, outstripping supply. On the marketing side of the business, obviously, pressures continue because it is unlikely that oil marketing companies would be able to, raise prices at the retail level. However, while Russian crude discount seems to have been lowered, the procurement still continues to be, maybe at around 30% kind of levels. So, what we believe is that structurally speaking, where the valuations are, the pack as a whole continues to look attractive to us.
All right. Um, also in terms of value buying for something like the pharma basket right now, a bit of niggling, worries around that Fed, beg your pardon, around that US FDA has already come through. Do you see that as a cause of concern? Something like a Sun Pharma has also done well. It's a healthy set of numbers. The specialty sales segment essentially has impressed in all the brokerages, triggering in a hike in their target prices. What do you make out of the entire space?
Yes, so that observation is fair that there seems to be some kind of a regulatory tightening at the end of the FDA. What we believe is that maybe domestic focused businesses could do better in the near term, especially the ones that are focused on the acute side. In the US markets overall, what we are seeing is that maybe pricing erosion in the generics markets has kind of stabilized. But yes, there is an overhang of the regulatory issues by the FDA. Net, we believe that maybe the domestic focused acute and chronic businesses, and maybe the API focused companies, which will benefit from a benign input and raw material cost cycle, are maybe relatively better placed than the US focused players.
Sure. I also wanted to chat with you about the FMCG companies. Essentially, Britannia reported its numbers today. I beg your pardon, yesterday, I would say. But the numbers have been fairly decent set of numbers. Top line was a bit of miss. Margins surprised the street on the upside. What do you make out of the entire space? The volume growth seems to be a bit of disappointment. Demand seems to be a bit of a challenge. What do you like within the space?
Right. So, it is true that, volume growth has been tepid. Rural recovery has been lackluster. But the expectation is that these companies will continue to benefit from margin tailwinds, largely driven by lower raw material prices. So, one would have to bet on them more from a longer term perspective, given that the consumer story in India has a long runway for growth, and in the near term, what we are likely to see is margin tailwinds. We would really need to see how the rural recovery kind of pans out in the second half of the year. As far as volume growth of the sector is concerned. Valuations for the sector, this is a favored sector relatively, and valuations continue to remain high. What we believe is that this is a relatively defensive sector, and there are very select opportunities within the space which one could look at.
All right, Sandeep, we're just going to leave it at that. And thank you for taking out the time and speaking to us this morning.
Thanks for having me.
Pleasure. All right, that's pretty much covering all the ground. It is a good start coming in for the markets. A bit of earning reaction on all the front that we discussed. We spoke about Britannia, we spoke about Tata Steel, essentially, and also Hero MotoCorp. Pretty much covering in all the ground when we have to talk about the space put together. But it is a good start. Let's actually also look at how Nifty is faring right now after some amount of gains that have come through for the markets. Let's just say a relief rally, which pretty much is in sync with the global sentiment, given the kind of undertone that we saw from Fed. But Mamaearth, is an IPO which you need to keep a close eye out on. It's the day 3 of subscription coming in for that one. That also needs to be watched out for. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.